Hey, good morning, everybody. This is Rick with Hit and Run Candlesticks. It's about 9:10 a.m. Eastern Time. We got about 20 minutes before the market opens, and it is Thursday, January 13th. I'm going to run through these really quick. The SPY here, we had a great hammer, good follow through. Yesterday was good follow through early in the morning, and it just kind of died off during the day. Pre-market, that's the pre-market candle here on TC2000, and it seems like it's acting pretty good, but pre-market does not give you a picture of what the last hour of the day is going to be, so stay tuned. The last hour of the day is going to be, could be very, very important. The lines up here, what I'm looking at is yesterday we need to show strength at or above 471, and we did. We didn't close above it, but we certainly didn't show weakness, so I'm okay with that. Looks like this morning we're opening up above 471, and maybe we're going to challenge 473 here. 473 is just this January 3rd candle, this low. That's all that is. But we do need to beat that candle. We need to challenge it, and we need to win before we can challenge the 478.90 area up there. Alrighty, let's take a look at these charts. We'll break them down and see how we might look at a trade on them. Budweiser and Anheuser-Busch is a chart that I have. I'm looking for a possible 69 profit zone and a 76 profit zone. But keep in mind, you want to follow price. We don't want to just rely on those profit zones. You want to follow price and pay attention to what price does. So we've got a nice little move here. Good activity in the charts. Low to a high, higher low, higher high, higher low, so on and so on and so on and so on. It just keeps on working. And as swing traders, this is exactly what we want to do. We want to find a trend that's working, and we want to hop on to that trend. Think of it as a train, a bullish train, and we want to hop on the train when the train slows down or stops a little bit and starts to move. So this T-line train here, T-line run is working right now, and Bud here is looking pretty good, so I'll watch that for an entry. Make sure you also keep your stops in place. Stops. We can put stops in right now. I mean, I can say, okay, we're going to put a stop here at the T-line at the low of this triple candle move right here. The truth of it is that's bunk. That's baloney, because we don't know where we're going to buy it. And where you put your stop at, you have to figure in where you buy it. An example might be, well, what if I bought it up here? Am I still going to put my stop there? Not no, but hell no. I can't necessarily put a stop in here on this recording, but I can help with that. We talk about this all the time in the trading room. Here's TX. I'm looking at, what am I looking at? 51, 50, 56 up here as target zone. We have J-hook, a J-hook setting up. Nice little J-hook. J-hook is a continuation pattern, and what we're looking for is that breakout that holds, and then price, that works itself up like that right there. So that's a nice little 14-15% move if bought near the bottom of the green box and sold near the top of the green box. Cat is setting up. Another one of those J-hook continuation patterns. That's one of our favorite chart patterns. Here we've broken out, and see how we went up, tested, and then boom, up. So here we're pulling back. What a great area to be buying. This is the 3/8 trap. Hey, there would be nothing wrong with buying on the breakout, setting up for the J-hook continuation pattern. Because once it breaks out and holds, that's when the J-hook starts its move up. This right here is just building the J-hook continuation pattern. MDLZ is another one setting up. We've got a nice little pop out of the box here, looking at 69.70, 73.80 up here as targets. And you can see how this one has been working out. Low to a high, higher low, high, higher low, higher low, higher high, low, high, and so on and so on. That's exactly what we're looking for. The beautiful, beautiful T-line run. That bullish train is moving up, and it moves up till the next stop. It lets traders off. New traders come in. It moves up. It lets traders off. Traders off up here, actually. Traders off. They lets traders off up here because that's what starts pulling it back, is the lack of buyers. So that's just profit taking. And then buyers come back in and push it up. Buyers start getting off the train or profit taking, pulling back, and then away we go. Coke is another one setting up. Nice little pop out of the box. Very tight 3/8 trap. Looking at 63 and whatever. I probably should put this line up here too. There we go. Looking at 63.80 and 66.45 up here as possible targets. Combine them together and you've got about a 10% move. That's great for Coke. Coke's not a big, it's not a big rocket ship, and it does great. It's just not, big numbers, but it's numbers. XP. So XP is a rounded bottom breakout. Became that yesterday when it closed over the 50-period moving average. Nice little bottom activity here. Let me point this out. You got a low, a high, a higher low, and then pop. Nice pop yesterday, day before yesterday. Yesterday showed positive trading, and then this morning we're just kind of hovering right here at the 50-period moving average. A few targets that I have, as I've mentioned in other videos, targets are one of the simplest things in the world to do. I think there's sometimes too much fussing over that, when in the end you're going to follow price anyway. But what you do want to look for targets is where the buyers and the sellers have had some kind of an argument. And an argument is just simply where where you can draw a line and you get multiple touches. You see the multiple touches right there. Buyers and sellers are arguing. Multiple touches. Buyers and sellers are arguing. Also, peaks and valleys are areas that you want to look for those target areas or those profit zones. So with that right there, I'm looking at 34.90. We'll call it 35. 35 and then 39.60 up here. This is a 18.5% move if bought, at the low end of that box. So that's certainly going to change depending on where it's bought at. And then depending on how it acts through here, whether you keep it or sell it, whether I keep it or sell it, then I'm looking at another 13.5% on that. The last one I have here is AT&T. Now, I bought AT&T yesterday, and this was also on the watch list yesterday. So AT&T has gone from this double bottom, a rally up, and a pullback. So here's the train. Chugga, 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 chugga. Letting some passengers off, profit taking. Minor dips like this is just profit taking. That's all it is. A little bit of profit taking. They go in, they have a sarsaparilla, I don't know, a beer, whatever they're going to have here. Vanilla Coke, whatever. And then they get back on the train and chug, 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 on the way up we go. And then all of a sudden we're at the next stop, and this is where some passengers get off the train, profit taking. Profit taking comes in, stops at that train track, has lunch, I don't know, shot of whiskey, whatever it does here. Cowboy days, I don't know, maybe it steals a horse, who knows. Moves sideways, and we're just waiting for that train now to continue its move up. So I bought this yesterday with the intention that this train is going to move up right in here. Remember, always put your stops in. Stops are a funny thing, and a lot of people have a lot of different ideas about stops, and as long as they work for you. You know, I look at this chart right here, and I'm a stock picker. I'm also a big believer that you can time your trades. Yes, you can. And so with that in mind, then when I look for a stock, when I buy a stock, I'm buying it with the intention of it going up. Let's draw this over here. I'm buying it with the intention of going up. And if it wants to dance around a few days, that's okay. Might even dance up a little bit and come back. I'm okay. I'm okay with that picture. What I'm not okay is with this picture. So when you put your stop in, be sure your stop is matched to your trading style, your idea. At least this is what I'm going to do. I'm going to make sure it's matched to, when I buy a stock, I want it to go up. It does not have to go up right away, but it has to go up. If it starts going down, exactly how far down am I going to allow it to go? Well, let's think about that. If you put your stop down here, okay, let's do this. This line, this horizontal line becomes very important right here, because anything below that horizontal line sets this trend off again. Now, of course, price, if price breaks below this line, it's not going to, here, I probably should do this. Let's extend those. Price is not going to be inside this. No, it won't. Not over here. But below that line, it's going to get inside the same little area as far as the tracks go. So if this was the train moving down, we could put up another train over here. Let's say we broke right there to the downside, and then let's make this blue. So we could do this right here. There's your train tracks moving down right here. Well, here you are right there. So I guess the point of what I'm trying to make is, to say the pivot low, that would be considered the pivot low. Not always the best place to put a stop. I'm looking at a 3/8 trap. Why do I like a 3/8 trap? Because it's a 3/8 trap. Where would I not like the chart? If it was below a 3/8 trap. That simple. Thank you, everybody. Thanks very much for watching the video. I absolutely appreciate it. Hope to see you in the trading room, and have a wonderful Thursday. Okay? You guys take care. Thanks.